I'm here today with Sherif Ayoub, CFO of APICORP. How are you doing today?
Doing very well, very well.
Perfect. For various reasons, there's a lot of speculation currently about significantly lower oil prices and presumably more difficult financing conditions for your customers. Does this put pressure on you to fulfill the role of counter-cyclical investor?
I think for us, the oil prices, nobody has a crystal ball to see what the oil prices will be. I think every single time somebody tries to kind of set a particular target for oil prices, they get disappointed. So are they going to be going up or down? Is it still up in the air? I think our chief economist had a point of view this year that it's going to be around the $60 to $70 mark. But again, that's always an adjustment period. Now for us, for APICORP, our profitability, our projects are not affected that much by the levels of oil prices. A lot of the projects in the petrochemicals or in the oil or in the gas, more recently also been expanding in the utility space. These are long-dated projects, so I think that will continue. It is counter-cyclical in a certain sense, in that we don't pull back from the markets if there is any particular shocks, whether it's monetary or oil prices.
Historically, you funded yourself in rials and dollars, but you have also undertaken a renminbi bond. Was this a one-off, or can we expect more currency diversification?
I think for us, it's certainly not a one-off. Besides the dim sum bond, we have done 3 Formosas over a 3-year period, and that will continue. I think we're expanding other markets as well. Some options that are on the table is green markets. Now, whether there is in USD or Euro, we'll examine it. And we'll be getting some thoughts as well in terms of expanding beyond our normal comfort zone. So taking a look at the Aussie dollar, taking a look at perhaps the Japanese markets as well. So we have a strategic incentive and a strategic objective of diversifying our investor base. Most of our investors are not from the region we're based, and that will continue in the future. So I think for us, definitely to answer your question, not a one-off, and that will continue, most likely going to be intensified in the coming period.
Mm-hmm. What are your borrowing plans for the next 12 months, and how sensitive is that to the oil price?
I think for us, again, our balance sheet is unaffected by oil prices. So if the oil prices go up and down, we have been consistently profitable since inception. For us, last year was a very good year for us. We beat our expectations, and we set a record in terms of profitability. So in terms of funding program, it's going to be driven mainly by our ALM considerations, especially on the liquidity portfolio that we want to keep in place to make sure that we fill the requirements for us to maintain our rating and to improve our rating, and we have a positive outlook this year. So that was going to continue for us. So part of it is liquidity, and part of it is balance sheet growth. And we're going through an exercise right now. We're setting a strategy for ourselves for the next 5 years, and it's going to put the target for us in terms of balance sheet growth. So the funding program itself is going to be derived from these 2 aspects. That being said, we also have to bear in mind that the rating agencies are changing the methodologies, and there is more of an incentive for multilateral development banks to extend the maturity or extend the survival horizon from the traditional kind of 12 to 18 months to beyond. So that will also affect our funding program to a certain extent. But for us, most of our funding needs were met in Q1 this year. We'll take a look at the markets. If we see an opportunity this year, will come, but we're not in any hurry to go to the markets. And the markets are a bit volatile right now as well, so there's an incentive for us to wait and see.